Good morning, members. It is Monday, September 24th. Hopefully, you had a great weekend. Getting back to the charts here, you can see we got the US dollar index. I've added a couple different color zones. They used to be blue and green. I've added a few more areas of resistance. Going forward here, you can see here, this is a 4-hour chart. We had that big breakdown. We came down to long-term support zone, which is this green zone down here. Since then, we've just seen hasn't been even much of a bounce. It's more just been a grind, a bear flag, working its way farther, out eating time up and working its way higher into next resistance zone. Overall, you can see we kind of got a little bit of a broadening formation overall, and that's usually a sign of weakness. It's just volatility is increasing and the bulls and bears are struggling, but you can see as we're working our way up into this orange zone, this is more or less about a 50% retracement of this breakdown. That's usually a pretty key reversal zone. And we also have these down trend lines coming down here. We've got major resistance way up here. Now, if we zoom back on the chart to get a feel where this orange level comes from some consolidations, breakdowns, some pivot highs, more consolidations, pivot highs, and some pivot highs breakout here. So there's a lot of levels right across there, across the board, which is going to probably start to stall the dollar out. Now, I did point out a while ago we could see it continue to work its way all the way up to the 80 level, possibly even the 80.50, and that is still possible. It could continue to have this bear flag and work its way up, but we're starting to get a nice long flag here that I think could start to roll over. Generally, the US dollar index, if you were to zoom back in time, a lot of times it's tough to see. This chart's pretty small, and there's a lot of them going back, but overall, usually when you see a push up in a bear flag, the dollar tends to always have one more surge, pushes to a new high, and then rolls over. You can see it happens here again. It pushes to a new high. A lot of times it just continues to do that, where you get these multiple highs, pushes to high, and rolls over. And again, we've got this broadening kind of formation, and we just had a new push into a high this morning as we got right into this resistance zone. So I do feel as though the US dollar is on the verge of rolling over and heading lower, or at least coming back down to possibly do a double bottom here, which if it does, we'll see equities have another leg higher. Overall, I think we're going to see a bit more fear in the market this morning. At this time, we're going to see the market gap down a little bit, about 0.5% at this time. And that's going to gap the market into an oversold territory, and we're going to see bonds jump. And I think what we're about seeing now is a little bit of a fear hit the market, which is what we want. We want to see fear. It cleanses the market, can give us an opportunity to add to our longs if we actually get a better opportunity to get long. Overall, we did the SSO ETF, which isn't quite the same as the SPY. I'll cover that in a little bit. Price action varies a little bit because there's no dividends on the SSO. But just jumping in, looking at the US dollar index, still in a major downtrend here, coming up into resistance. Over this week, I think we're probably going to see the US dollar start to top out, and if with any luck, we're going to see it roll over, and we're going to see equities continue to move higher. Looking at energies, here's the crude oil chart. You can see here we had that big move down the last week. It's had a little bit of a bounce, starting to head back down this morning with a stronger dollar. Overall, I do feel as though it's still somewhat oversold. It was a pretty big move down. I wouldn't be surprised if we see the crude oil maybe bounce around a little bit of a bear flag here for a while, maybe form a little bit of a rising wedge, and then eventually continue to head lower. Overall, I don't really see a setup in crude oil. This big move here has done some damage, and now the question is, how is it going to consolidate, and is it going to continue the trend? I don't really like this chart as a setup going forward here. Looking at natural gas, had a nice pop last week, started to sell off. It's pulled back this morning a little bit. Got this key kind of pivot level here, and we had a nice pop above that. We really wanted to see, usually when you get a nice impulse leg, we want to see two highs broken. We had one high broken, didn't quite get up to this one, which is the key one. When that one is broken, then we can really ratchet the stops up, and we'll know that the trend is more or less reversed. It got close to it, and it's starting to roll over a bit this morning. Hopefully it'll find some stability right across this kind of little basing pattern here and become oversold. The nice thing here is We're getting about 1.5% drop this morning, and again, it's on no volume, which is good. And pretty much you can see here from our first buying spike, we had another buying spike. Pretty much you can just see that there's accumulation going on down in this level, and this green zone should act as support. If it comes down there, we'll probably see some big buyers step back in and support it, and this overall pattern could eventually just turn into a mini little cup and handle pattern, and from there you get a breakout to the upside. Typical measured move would be just from the bottom to the top of the handle. You take that, you flip it to the upside, and it pretty much brings us to this previous pivot high, which is good when everything seems to line up that way. So that's where we could see that going. A good cup and handle, you can actually see it go 2 to 3 times the size, the depth of the cup. But overall, the first main target will be a first more or less full cup to the upside, which brings us to this previous high, which would be a pretty key resistance for the first kind of pause, major pause and pullback. So with any luck this week, hopefully we'll see the natural gas kind of consolidate here and then break out and explode to the upside. Looking at precious metals, they've been holding up really well, but they're starting to pull back this morning with the rising dollar. Here's the gold chart. You can see here we're trading down about 1% this morning. Came up with touch and pierced that high. Sellers came in, pushed it down. We're not having huge volume this morning, but there is some elevated volume. We're getting a little bit of selling. Overall, I do feel as though we might see a little bit of a downdraft here. We want to break these lows. When you break these lows, you flush the market out of stops. So if we'll probably see a big volume spike, could see it drop down. This will be a support zone coming right down into here. And hopefully we don't just see one giant sell-off in gold. Gold and silver are known for that. You'll just see a complete red bar straight down, happens in a couple seconds or minutes at the most, and more or less flushes the market completely clean, and then it'll usually consolidate and start to work up from there. But right now we're just seeing nice tight consolidation more or less in gold, and it's pierced a first little pivot low, I think, here this morning. And again, we've got clear resistance, but it's holding tight in this pattern. So I do feel as though gold in long run is still going to go much higher. Looking at silver, silver's the same thing. Oops, sorry, that's the bond chart. Here's silver. You can see silver. We zoom in, we're down about 2 1/3% this morning. Silver is more or less high test gold. You can see we got a nice move up here, came up to resistance, starting to roll over. It always exaggerates on its moves compared to gold, so it's already broken this first level, it's broken this second level, and now it's working its way down a little bit lower. Overall, had a nice run up. I wouldn't be surprised if it finds some support somewhere through this level right in here. Looking at the gold miners real quick, we haven't looked at them in a couple days. Gold miners have had an extended run up. Of course, they're equities, so they're going to hold up even more with equities. And we are coming up into these previous pivot highs here. Had an explosive parabolic move to the upside. It's actually flagging up, which on short-term basis is bearish. When you get a full flagpole and you get an upward flag, that's actually just a sign more or less the market's starting to get exhausted. It's getting overbought, and that's usually when you see a pullback. A mini one, you could see it as an example. You could see we had more or less a run up here in a couple days, and then it continued to grind higher with flagging up. Same with over here, you get a strong move and you get a couple days of it just kind of grinding higher. Not the best examples. This one over here is better. You can just see you get a pullback. I wouldn't be surprised if we see a pullback down, possibly the 52, 53 area, kind of cleanse the air a bit, and then it could be ready to continue marching higher. Looking at bonds, money has been flowing back into bonds the past week, and you can see here this morning we're starting to work our way back up to we pierced the previous highs. We're pushing a little bit higher. Overall, I do feel as though we zoom out on the chart a bit, I do feel as though we're somewhere right about in this area. Overall, the trend is more or less down in bonds right now. I feel as though this is kind of where we are. We had the first kind of leg push higher. We've had a first surge and pullback. We're starting to go to a second surge, which is the second surge is right here. And if we get a little fear early this week, today, tomorrow, maybe Wednesday, we could see this continue to move up and grind its way higher, and eventually we'll see people panic out of equities. We'll see fear ratios spike up on our charts, and everybody will pile into bonds, very similar to what you see back here, and bonds will jump up, and then overall they'll roll over and continue to head lower, which means stocks will bottom out and rally. Looking at the SP 500 daily chart, see where we stand for today. You can see here we've had nice stair-stepping action going up. We've had multiple days in a nice consolidation of flag. Cycles are slowly taking their time and starting to bottom here. This morning, if the market opens where we are now, then we're going to see the market gap down into oversold territory. It does have room to continue to head lower, but overall it's going to be oversold, and the cycles will be bottoming today and tomorrow, and we should start to see some buying step in to equities. But you got to remember, the biggest move usually happens near the end, so we could see the fear really wash out and create a sharp dip in price, very similar to what you see in these dips back here. They usually see a big gap and a dip down, flushes the market out, and then from there you see it continue to run higher. So that's kind of what we're looking for. We're looking to pick up on the dips and trim on any rallies. Now looking at the SP 500 futures intraday chart, you can see where we stand in pre-market. This is last week's trading sessions. This is 24-hour chart, and the market closed right about here on Friday. So you can see in overnight trading, we are in pre-market trading this morning, we're heading back down to these previous lows, and we're just starting to get a bounce right now. Overall, we ended up taking a long position in SSO, equivalent to right about here. Got that nice kind of run up the first day, second day kind of pushed a little bit higher, eventually sold off. We went from an oversold territory to an overbought territory on the intraday charts, and I pointed out on Friday afternoon we'd probably see some weakness simply because the market was overbought. Now if I was to just change the settings here, you'll be able to see these overbought, oversold territories. Here's last week's price action. You can see we had this oversold dip that we ended up getting long right about here once we started to see a close to a new high on the 10-minute chart, and we saw a nice run up, had a nice surge, pop the next day. Usually when you get a pop and you get panic buying, which means everybody is piling in at the same time with a ratio of 3 to 1, so there's 3 buyers to every 1 seller, and you move a certain percentage after a period of time, usually you'll see the market actually want to pull back and backfill a gap like that, and that's exactly what happened. Went into oversold territory, and now we're equivalent to pulling back to these lows here, which we're actually going to gap down into these lows at this time with another oversold territory. Now that being said, I don't want to get long at the same price. If anything, I want to see another dip to a new low with panic selling and an oversold territory. I don't want to accumulate at the same price. I want to accumulate on a deeper pullback only of about 0.5% or more at lower prices. And if we just zoom out on the chart, that would be we want to see something more or less move down. We want to see these stops kind of get run, really panic out. There'll be a support zone somewhere down here, and overall the market will be oversold, and we'll have an opportunity to get in for another big leg higher with a nice tight stop eventually here. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.